Hello guys, welcome back to my channel. If you are seeing this video today, make sure you like, follow and share. So I'm going to show you guys how I was able to catch this beautiful trade on GBP USD. As you can see on the chart, GBP USD have been having a very good price action. So GBP USD just breaks structure to the upside. So I normally use 3 time frame for my trading. I use my daily time frame as my higher time frame, and then I use 4 hours time frame as my medium time frame, and I use 15 minutes or 1 hour time frame as my lower time frame. So as you can see on the chart, GBP USD just breaks structure to the upside, meaning that in my higher time frame, GBP USD is bullish. What happened on this trade is that I didn't wait for GBP USD to retest to my zone after breaking my higher time frame structure. So what happened is that I have to capitalize on the lower time frame push, which is the pullback. I have to capitalize on the pullback and then have a very nice trade on GBP USD. As you can see on the chart, after the break of structure, market will not continue to go up. So market will always have a pullback after the break of structure. And then GBP USD is just having its pullback now after a break of structure. So what happened on the chart is that I have to capitalize on the lower time frame, which is my I have to capitalize on my medium time frame, which is my 4 hours time frame. And then if you check on my medium time frame, you can see that the GBP USD is doing lower low, lower high, lower low, lower high. Mind you, this does not mean that GBP USD is bearish. No, on a higher time frame, which is my daily time frame, although my higher time frame might not be your higher time frame and my medium time frame might not be your medium time frame. So let's go down to my medium time frame, which is my 4 hours time frame, because on my higher time frame, which is my daily time frame, you can see clearly that GBP USD is doing its pullback after the break of structure to the upside, and then I decided to capitalize on the pullback to have a very nice trade. So what happened here is that this is the last break of structure here. You can see the last break of structure. And then after the last break of structure, what happened is that I have to mark out my supply zones. So although it didn't show on this chart, I guess I have cleared it before I make the video. But I marked out on my chart before I took the trade. So I mark out my previous supply zones, a possible place that the market have to react. And as you can see, when the market reaches some supply zone, it have to react. But due to there is not enough liquidity in the market, it have to continue going up until the market gets enough liquidity. So as you can see, what happened here is that market was trying to go down. There is insufficient liquidity in the market, and then it keep going up. The market mitigate the extreme supply zone, which must hold for the medium time frame to remain bearish. And then after the mitigation, market go down, but there is insufficient liquidity in the market. And then I expect a pullback, and when the pullback will happen, I expect the pullback to take out the previous high and making it to be an inducement, because a lot of retail trader is going to enter that particular high and then place their stop loss there. And then what happens is that market is going to come back, take them out, and then a lot of liquidity is now going to enter the market. Big boys, the banks, the institution is going to enter the market, and then it's going to eventually push the market downside. So that was the reason why I didn't enter at the first mitigation, because I knew that for market to continue to go down and then break the previous low, you have to have some certain amount of liquidity in the market. And looking at the charts before the movement, there is no a good amount of liquidity in the market, and then markets have to pull back. As you can see, take out this high, making the inducements. A lot of the retail traders hit their stop losses. Big boys, the banks, everybody entered the market, and then eventually we started going down. And as you can see, the market just do a little bit choppy, and then slowly but surely go down, go down. So after the markets took out the high, sweep the liquidity, and then we can now go back to the lower time frame, which is my 15 minutes or my 1 hour time frame. But on this particular trade, I use 15 minutes as my lower time frame. So as you can see on my lower time frame, which is my 15 minutes time frame, this is the last high that the market creates. This high now is the last high that the market creates. And then as you can see what happened, don't mind my line. My line is not straight, but just get what I'm trying to say here is that the markets have to come and take out the high with a body and then show a very good sign of rejection. And immediately I saw the sign of rejection. This is when I know that surely you are going to go down now. This is what I've been looking for. So what happened after the sign of rejection? I have to scale in on my MT5, go to my MT5 and then enter my position and then allow the trade to do its things. So as I can see what happened on the trade took a lot of time and then eventually hit my take profit. But what I could have done better on this trade is that I could have waited for confirmation because normally I enter a trade with confirmation entry. Sometimes I enter aggressively, depend on the probability of the zone that I enter the trade. But the reason why I enter this trade aggressively after the liquidity sweep without waiting for confirmation is because the market have already mitigate my 4 hour supply zone. It have already sweep the inducement that it created. That's when I know that this is a very high probability trade and then I'm not going to miss it out. And then again, sometimes when you are waiting for a confirmation entry, what will happen is that after the mitigation of the zone, the market can go down very fast to your direction without even pulling back, depending on the amount of liquidity that is in the market. So I don't want to miss the trade. That's the reason why I entered the trade aggressively. And then as you can see what happened, the trade lasted for 2 trading weeks and then eventually hit my take profit. And that's what matters in the trade. I think this trade worth about 1:3 to 1:4 risk reward. So this is a very good trade for me. I don't mind my entry. I don't mind my what I mind most is my exit and then if I make money or not. Thank you for watching this video. If you're watching this video for the first time, please like, share, and follow. See you in my next video.